Hello guys, in this video I'm going to be going over how I got my $2,200 payout in like a week of trading. That's all it took, I'm still a kid, got all this fucking money from a payout. Well, it's not a crazy amount, but I still think a lot of you guys will find value. So the point of this video is going to be to go over some psychology tips, strategy tips, and the 5 trades I took. I took 5 trades. Well, no, I took some more. I took some break-evens and like tiny losses. But luckily it was like no full-size losses. It was just 5 straight winners. So I'm going to be going over them and giving you guys proof as well, because I know a lot of you guys won't believe me and will want to see proof. People who have been following me from the start will know, I'm not someone to lie. And if you guys have been following from the start, you'll know a lot of effort has been put in to get to this point. So it's finally paid off, and hopefully it keeps paying off. It has been the last 5 weeks. Still haven't taken a loss in 5 weeks. So I'm going to get into the trades I took. Hopefully you guys can find some value, because that's the point of these videos, is for you guys to find some value. But let's get into it. First off, we'll show some proof. Alright, so we are here on TopStepX. This is the platform I use for, my trading. If anyone was curious, and if we come here, we can see this is, like a week's worth of trading. 1 week. I did take a small loss here. That was while I was in Krakow. And then we took the final and 5th win here. Friday, which was 2 days ago now. I took another win, but that was on my evaluation. So you can see I've almost passed another 2 evals. But everything you see here, multiply it by 3, because there's 3 accounts. Also, here is one of the requests for one of my payouts. Here is another request where this payout had a little bit more money in the request. And here is the other payout request of $730, which was on TopStep's new platform, which is why it looks a little bit different. Now that I've given you guys proof, you guys should hopefully believe me. If you don't, I've got videos documenting day by day already. But this is going to be a little bit more in depth and a little bit more, well, I guess just here instead of the whole vlog, which I usually do. So let's get into trade by trade, what I did, because I showed you guys I didn't take any full-size losses. I'm not going to show you guys the break-evens because they're boring. I'm going to show you guys how to do stuff right. I'm not going to show you guys how to do stuff wrong. I'm going to show you guys how to do stuff right. Whew, okay. So, this was the first trade I took on my free accounts, right? What did I take? Well, what do I use, right? There's 2 things I use. I use fair value gaps and liquidity. That's the first things I look for. Fair value gaps and liquidity sweeps. What do we have here? What do we have here? We have a fair value gap. Let's make it look a bit nicer. We have a fair value gap, right? We've drawn into it. All I was thinking right here was trading from this fair value gap. Where are the bearish fair value gaps? Here. So I don't really want to trade into these bearish fair value gaps, but we're in a bullish fair value gap. We're not in a bearish fair value gap. I'm going to look for, longs into these bearish fair value gaps. As soon as we get into the bearish fair value gaps, I was thinking, okay, we're going to, probably change our mind once we come up into these. But for now, we can just look for a break even in this zone, right? Now, when I'm using the 15-minute, what do I then go to? I correlate the 15-minute with the 1 minute. All right, I'm not using the 50-minute and the 5-minute because they're like, what? The 5-minute is a third of the 50-minute. It's basically the same motherfucking time frame, and it's basically going to take just as long to play out. When I'm using the 15-minute, like gaps or liquidity sweeps on the 15-minute, you can see if we go on the 1 hour, I'm not using really anything on the 1 hour. There's nothing down here on the 1 hour. The nearest sweep would be down here. We're using the 15-minute, right? We're using a 15-minute liquidity or gap confluence. Now, the 15-minute, I correlate with the 1 minute. When I zoom onto the 1 minute, what do I look for on the 1 minute? I look for 2 things, either a break of structure or a inverse fair value gap. In this situation, we were looking for, and by the way, I'm assuming you guys know the basics. I'm looking for a break of structure. Where is the nearest high? Here. We draw into the gap. This white zone is the gap. And then we displace out. Now, why didn't I enter just off of this? Because market hadn't opened yet. This happened and then it was 9:27. I want to wait till 9:30. But what do we get before 9:30 opens? We actually get a retrace into this gap and rejection. So now I'm looking at this like, holy shit. This is perfect. We've shown we're, rejecting bullish structure. You know, we're respecting it. We've also shown we're rejecting bearish structure. My stops are going to go down here, you know, because I don't expect to react lower into this gap. I really, you know, at this point, don't even expect to go into this 1 minute gap. These are the type of trades that I really expect to move very quick. However, I don't want to put my stop loss super tight, you know. I want a reasonable stop loss, a humane stop loss. And where's my take profit going? Well, break-even's going on this high here, because remember, this is the bearish gap. If we go on the 50-minute, that's the 50-minute bearish gap. Full TP is going to be here, right? What happens? What happens? Oh my god, first candle, boom. Plus like 300, because I was only risking 300 on that trade. Okay, that is trade 1 wrapped up. You know, that is why I took trade 1. Right, getting into trade 2, this was taken on Wednesday, so this was the second trade. Well, this was the third trade because I took a break even on Tuesday. Like I said, I don't want to show you guys how to fucking lose. Maybe I'll save that for another video. Or how to avoid losers, how not to win. I don't think that would be as interesting as a video, as you guys can imagine. But I guess I can make another video showing you guys how to preserve capital in shitty markets. But this is the second trade I took, right? Basically, on Wednesday, we had run up these all-time highs. If, you know, because I like to use S&Ts, if the NASDAQ has run up all-time highs, which it has, you know, we can see here, but ES has failed, you know, this same high over here, exact same high, hasn't been run up, we have S&Ts. This is an S&T divergence right here. So that is a super bearish confluence. I was looking for shorts, right? Now, when I'm using the 4 hour or the 1 hour, 4 hour or 1 hour, you know how I said when I'm using the 15 minute, I'm going on to the 1 minute. When I'm using the 4 hour, I am going to go on the 5 minute because I don't want to use the 1 minute chart for the 4 hour chart. That doesn't make sense. All right. I want to use the 5 minute, maybe even the 15 minute. I want to make sure we're, you know, rejecting stuff on the 15 minute. But I just want to make sure we're displacing these highs, right? Oh my days. What do we do? What do we want to look for? Either a breaker structure or an inverse fair value gap when we zoom into the 5 minute, right? I don't need to inverse all the gaps. I just need one gap to inverse, typically. Right, unless they're like perfectly stacked up on top of each other, but they weren't in this situation. Now, you could say, well, why aren't you trading, you know, or why are you trading when you have this bullish gap? Because we have this bullish 15-minute gap. Because look at the size of this gap. This gap is fucking massive. You know, if we're coming into this gap, which we are, I expect probably, from what I've seen from my own experience, we're probably going to retrace this entire gap just because of how massive this 15-minute gap is, you know? We're probably not just going to do a little tap in, tap, and then zoom out. We're probably going to want to retrace it, you know, have a decent retrace. That's just what I'm expecting, you know? So, anyway, leave the 15-minute alone. I'm fine with the 15-minute. I'm expecting a pretty deep retrace. Typically, I'll look for retraces to the 930 low, which is here, or I guess you could call it here. So, I'm fine with the 15-minute gap. I don't care. Now, we want to look for an IFVG, inverse fair value gap, or breaker structure. The breaker structure is my target, so we're not going to look for a breaker structure. We're going to look for an IFVG. Where's the IFVG? Here. Right? We're not entering, you know, maybe when we think it's going to inverse. We're entering when it inverses. You know, you can enter if it's like this, you know, and it's a minute before an inverse, and it looks like it's very much definitely going to inverse, you can enter that. That's what I did. I entered here while the candle was still forming. What am I targeting? What am I always targeting? I'm always targeting one-to-ones. You know, that is why I have such a good win rate and my psychology stays so steady. A lot of you won't like the idea of one-to-ones, but guess what? If you choose to go with one-to-ones, oh no, I'm making half the amount of money as I would with a 1-to-2. Your win rate's going to get better automatically. Automatically, your win rate is going to get better if you go with one-to-ones and take easy break-evens, right? So, what does that mean if we have a better win rate? We can risk more per trade. We can risk more per trade. I'm risking 400 a trade. I might even push it to 500. Once I get new accounts, I'll probably push it to 500. Once I have like 5 fresh accounts, I will probably push it to 500 risk just because of how good my win rate is with low risk to reward, right? Please, guys, just try lower your risk to reward, please. Now watch what happens. 1, 2, 3. Oh my god, that was so difficult. Right, trade 2 wrapped up. Let's get to trade 3. Alright, this was the next day. This was Thursday, the 10th of freaking July. So let's go over what we took. A lot of people's dashboards, I remember, were freezing on this day. Sorry guys, if that was you. Mine was also freezing, but I managed to clutch up. What were we taking? Well, we were taking it off the 15-minute, right? Because why? There's no 15-minute highs, you know. There's no 1 hour highs. The nearest 1 hour high is all the way up here. We have not swept that. Same for here. We have not swept this hourly high. But on the 15-minute, we have taken 15-minute highs, right? We've taken the 15-minute highs, but on ES, we haven't. So what do I have? SMT. Why is that an SMT? Because NASDAQ has taken the highs, but ES has not taken the highs. Oh my days. Oh my days. How difficult is that to understand? NASDAQ took this high, ES didn't. Nearest bearish target down here. Nearest bearish target down here. I'm not going to lie, while I was preparing this, I did skip a candle in advance, but you guys know I'm not lying, because you can go back and see me trade this live. So, this is our nearest 15-minute target. This is the target we've already taken. We're heading to this target. What do we want to do, guys? What do we want to do? Type it in the comments or say it to yourself before we go down. What do we want to do when we have a 15-minute liquidity sweep or 15-minute gap? Which time frame are we going to? 1 minute. Oh my days. Well done, guys. You're genius. So, you know, we'll go to the 1 minute. Now, guys, what do we want to look for? There's 2 things we want to look for. Inverse fair value gap or break a structure. Where are we going to break structure? Here. This low here. Well, technically that low. Technically that low. But anyway, we get an inverse fair value gap. As well as a break of structure, we inverse this gap with 1 candle. What do I do after that candle? Boom, short it, boom, stops up here, boom, take profit. Down here, you know, I'm going to go break even on this low. Bang, bang, bang. Oh, look, 2 candles, 1 candle, 2 candle, bang. TP hit. And I'm always going break even on like lows like this. Any 15-minute significant low or 15-minute significant gap, I am always going break even on, trust me guys. Unless, like I said, it's a humongous gap, I'll be willing to trade into it. But in this case, you know, it was a low, it wasn't a gap. So, when break even there, what happens after? Maybe we shit the bed? Yeah, we shit the bed. But, I'm fine just taking the 1-to-1s. Anyway, that's trade 3 wrapped up. Let's get to trade 4. Alright, trade 4, loading in now. This was Friday the 11th. This was a pretty quick trade for me. Pretty simple as well. So if we go on the 1 hour, we literally have, well, I guess we do have stuff going on the 1 hour. But, we have already, if I can get my fucking tool out, we have already reacted out that gap. Where's my gap tool? We've already reacted out this gap, so I don't give a shit about this gap. You can see this candle already reacted, pushed down. We can see that more evidently on here. We already reacted out that gap. So, what am I looking for, right? What the fuck am I looking for, right? What am I looking for? We go on the 15-minute. 15-minute, we got this high here. My parents need to shut the fuck up, bro. What do we have on flipping ES? We have also, we don't have SMTs, but we do have this 15-minute high getting taken. Actually, do we have SMTs? Yeah, we do have SMTs with these highs. We do actually have SMTs with these highs. So we do also have SMTs. Right, same high. ES didn't take it. NASDAQ did. However, we're looking at a 15-minute high getting swept. That is the main thing of this trade. How do we know it's been swept? Because look at this wick it's left. This wick is super important to show rejection. Again, tell me guys, what do we go on after we've used a 15-minute high? 1 minute. Let's go to the 1 minute. Now what? Now what do we want to look for? Try spot it right now. Try spot it right now on the screen. What do we want to look for? It's already happened. It literally just happened. 2 things. Inverse fair value gap or break a structure. Fair value gap. Oh my days. What do we get? We inverse it. We inverse it. Bang. We're going to short there. Bang. Stops up there. Bang. TP on these like lows down here. You can see. This has got to be a significant low. If we go on the 50-minute, that should be some sort of low of significance. There we go. That is a low of significance. What are we going to do? What are we going to do? Blah, 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 blah. Blah, 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 blah. Oh my days. How difficult is that? I'm not going to lie though, these are super clean trading conditions. This is from last week. If you traded last week, these were super clean, but this week, I'm talking like this week, they weren't as obvious, they weren't as clean, and weeks like what we had this week are just where you kind of have to preserve capital, and hopefully, you know, there might be one or 2 days where price action's clean as fuck, but let's get into Thursday the 17th. This trade was probably the only really clean trade of the entire week, in my opinion. Like, the only really clean trade. And it was so clean that I was able to trade it in an airport. So, what is your guys' excuse? I was, you know, in the airport with school while taking this trade. That is how obvious this trade was. This is how obvious this shit is to me. I was able to take it while trying to look for my luggage on the little fucking conveyor belt that goes around, right? So, let's take a look at what I did, right? 1 hour. What do we have on the 1 hour? Okay, we do have the 1 hour gap, right? We have an hourly gap here. But we've already reacted into this and taken the highs. Okay, we've already reacted out this 1 hour gap. I don't give a fuck about this hourly gap. You know, if we were good to trade off the 1 hour, it would be down here. But we didn't retrace down here. We didn't retrace down here. Right, so now what are we doing? We're going on to the 15-minute, because the 1 hour, useless, right? We've already reacted out the only gap we have. So, that just makes it, you know, I don't like that. What do we have? What do we have on the 15-minute? Let's go 15-minute on both. What do we have on the 15-minute? What does it look like? Right? What does it look like? SMTs, oh my goodness, this is so hard to fucking comprehend. SMTs on the lows. Wow, that was difficult to see. Oh my god, that was so difficult to see. SMTs on the lows. So that means that NASDAQ swept liquidity, but ES failed to. Right? Where are our bullish targets? Where are our bullish targets? Where are our bullish targets? This high, right? This high. So as soon as we hit this high, if we're in a trade, we're going break even. If we're not in a trade, we cannot be going long any longer. Right? What do we do after a 50-minute gap or a 15-minute sweep of liquidity? 1 minute. Now what do we do when we're on the 1 minute? What do we do? Well, what do we do for the 5th time? For the 5th consecutive time, what do we do on the 1 minute? Please get this, please. Just please. It's already happened, it just happened. Please. What are we gonna do? No, we're gonna have to place the long. No, we're gonna have to place the long position for the 5th time, bro. For the 5th time in a row, we're gonna just have to place the long position. Why? Because we got an inverse fair value gap. We inversed it. This is why you have to be super careful, by the way, because this looks like an inversion. It's not an inversion. The inversion is the closure of a candle outside of the gap. You might be thinking, oh, well, this candle went outside the gap. It's opened. It's opened outside the gap. Actually, it didn't even open outside the gap. Oh, yeah, it didn't even open. But let's say it opened here, right? It opened. We need a closure outside the gap, not an open. Right? Jeez Louise, man. This is a closure. This is a very clean closure. Oh no, what's going to happen? Oh my god. I never would have predicted that. I never would have predicted that. We did the same thing for the 5th time in a row, and it played out the same every time. This trading stuff is difficult, bro. Difficult. I'm just going to give you guys, or leave you guys, with one piece of psychology advice. I'm going to start doing this at the end of every video. I guess we could call it like Harry's psychology advice of the day. It's going to be short and simple from here. Take your time, right? Don't rush into anything. Don't rush into evals, you know. Don't rush into fundeds. Don't rush into fucking live accounts. Don't rush into payouts. You know, I was speaking to someone the other day, and I was telling him, you should be risking 400 on your eval. You got 2,000 max drawdown. Let's risk 400. And he was like, yeah, but if I risk 1,500, I could pass it in like 2 trades. And I was like, bro, you don't know how to trade. You don't. You've never passed an eval in your life. So, moral of the story, you know, if you're not going to listen to people who have done it before you, and learnt the hard way before you, you're unfortunately going to have to learn the hard way yourself. And for some people, that is the only way. But please, guys, if you don't want to learn the hard way, which you probably still will, because most people refuse to listen, just take your time with everything you do, you know. Take your time through demo, take your time for your first eval, take your time for your first funded, and it'll be all good. So that's my psychology tip to wrap up the video. You know, I'm going to be dropping these in at the end of every video from now on. But hopefully this was valuable. Subscribe, join the Discord, DM me, you know, TikTok, Instagram, Discord, if you want any help with anything specifically. And yeah, peace.